Assalamu alaikum. Welcome to video 8. This is IAS 12 income taxes, relevant for both SBR and FR students. So here, the scope of the standard. IAS 12 covers both current and deferred tax, but deferred tax is the most which will be asked and reviewed here. Now, what is deferred tax? Deferred tax is recognized on a temporary difference. Why temporary? Because these differences will go. Okay, it will be removed later on. It is only for temporary period this differences is there. So that's why this deferred tax is recognized on temporary differences between your carrying amount of an asset or a liability and its tax base. Why does deferred tax arise? Number one, because your accounting profit that you have calculated and the taxable profit, there's a difference. Sometimes the amount that you're deducting to get the profit, for example, depreciation, is not allowable for the tax purpose. That's where that difference occurs, and that difference is only temporary. During the long time, there will be no difference. It will be both same. So that's why there's a difference between the carrying amount of your asset and liability and its tax base. What is tax base? Amount attributed to an asset or liability for tax purpose. Temporary differences can either be two. There are two types of temporary differences. When your carrying amount is more than the tax base, it is known as taxable temporary difference. Why taxable? You can tax on it. It will be taxable further. Okay, which will give rise to deferred tax liability. Okay, next is deductible temporary difference. When your tax base is more than the carrying amount, it will give rise to deferred tax asset. Now, in your exam, the main thing is to identify whether it's a deferred tax liability or asset. Okay, now deferred tax should be measured by applying the applicable tax rate to the temporary difference. First, you get the temporary difference, which is carrying amount minus tax base. Then, on that temporary difference, you multiply the tax rate, which will be given to you in the question. That is your deferred tax. Okay. So now, what are the sources of taxable temporary difference? That means if these things are there, the temporary differences that you have will be taxable. That means carrying amount is more than the tax base. Number one, depreciation of an asset is accelerated for tax purpose. Okay, that means depreciation of an asset is accelerated for tax purpose means they are giving you more tax allowable expenses to deduct from. That will reduce your tax base. So lower your tax base, difference there will be a greater difference between the carrying amount and the tax base. So lower the tax base, carrying amount is more. That means temporary difference is taxable. Next, development cost that were capitalized and amortized in your accounts, in your accounting records, but they are deducted as incurred for tax purpose. What happens? Again, it's a taxable temporary difference. In all this case, your carrying amount will be more than the tax base. These are examples, and make sure that you know these examples, because in your exam you might be asked one of this. Could be one of this if it's taxable, and if it's deductible, then could be which we are going to cover in the next slide. Could be one of them. Okay, because you will not be asked outside of this. If there is any scenario, you will only be asked within this. Next, a revaluation. When is the revaluation is done? Revaluation will not increase your tax base. It will only increase your carrying amount. So because tax base does not change, carrying amount changes. So carrying amount becomes more, tax base remains same, does not change. It's a deferred tax liability. Okay. Next, interest revenue received in arrear, which is accounted for on accrual basis, but taxable on cash basis. So again, there will be a difference between the carrying amount and the tax base, because one is on accrual basis, one is on cash basis. Then temporary differences that arise on business combination. If assets or liabilities are increased to fair value, but tax base remains at cost. So that means deferred tax will be recognized on that differences, which will be included as a part of net assets acquired. Now, next is the sources of deductible. Here, your carrying amount is less than the tax base. For example, losses in the statement of profit and loss, where tax relief is only available against future profit. Next, intra-group profit in inventory. that are unrealized for consolidation purpose but taxable in the individual company that made the unrealized profit. Accumulated depreciation in the statement of financial position is greater than the cumulative depreciation for tax purpose. Pension liabilities recognized in the financial statements but only allowable for tax when contributions are made to the scheme in the future. Research expense are recognized as expense in accounting profit but not deductible for tax until a later period. And income deferred in the statement of financial position but has already been included in taxable profit. So these are source of deductible temporary differences. If you are not able to make this out, if you're not able to understand this, I'm sure many of you will not able to understand why is deductible, why is taxable. You have to watch my detailed IAS 12 lecture which is there under my FR playlist and also my SBR. You have to go and watch it. The technical area, that is the calculation part, to understand this better. Now the accounting treatment. Once you have decided that it's a deferred asset or a deferred tax liability, so deferred tax asset will be recognized on all deductible temporary difference, but to the extent that it is probable that taxable profit will be available in the future. Because if taxable profit is available in the future, you can utilize those losses against the taxable profit. Next, IAS 12F does not permit the discounting of deferred tax liability because it's very complex. So the charge for deferred tax will be recognized in your statement of profit and loss unless it relates to a gain and loss that has been recognized in other comprehensive income, for example regulations. So in which case your deferred tax also will be recognized in other comprehensive income. Mostly this is for as in property, plant and equipment under IAS 16. If it has been revalued, the gain or loss will also be recognized. The deferred tax gain or loss will also be recognized in OCI. So that deferred tax will be recognized in OCI because gain and loss also was recognized in OCI. Otherwise, almost all of the time, it will be recorded in profit and loss, the deferred tax. Okay. Now, example 1. There are two examples which we are going to go through. Example 1. During a year, company is performing a revaluation on its property. So, revaluation surplus is 100,000. Current tax rate is 20%. So, therefore, 20% on that 100,000. It's a deferred tax liability. 20,000 will be recognized. Okay. Why liability? Because when revaluation happens, carrying amount increases. Tax base will not change. Okay. Go to the sources of taxable temporary difference. This is the sources of taxable temporary difference. So deferred tax liability will arise. So 20% on 100 is 20,000. So this will be recognized in OCI. Why OCI? Because revaluation surplus goes in OCI. So debit tax expense in OCI of course and credit the deferred tax liability. Okay, example 2. Company is making a loss. Mostly loss is deferred tax asset only. Okay, but this loss can be offset against the future profit. Current tax rate is 20%. So deferred tax asset in this case, take 20% of 50 which is 10,000. So deferred tax asset of 10,000 can be recognized provided if it is probable that company is going to make taxable profit in future to utilize that deferred tax asset. Now, these are the 5 exam kit questions. This is for SBR students, not FR students. You have to do Hudson, Hose, MC, Chuckle, and Bohai. Thank you for watching, and I shall see you in the next standard. The next standard is also very frequently tested standard both for FR and SBR students, that is IAS 16, property, plant and equipment. So I shall see you in the next video. Make sure that you do questions on IAS 12, both for FR students and SBR students. Thank you.